Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. It's been a turbulent 12 months for Australia's media companies. First, advertising revenue was whacked by the pandemic, despite a huge appetite for news and information. Then there was a very public fight with Facebook, which saw the digital giant ban news content from Australian providers. There were CEOs changing, big shifts in radio ratings, a delayed Olympics broadcast, and plenty more. So what did it all mean for the media companies and their shareholders? And what's the future look like for an industry set for more consolidation? Tim Burrowes is the founder and editor-at-large of Mumbrella and now the proprietor of media and marketing industry newsletter Unmade. That's UNMADE, Unmade. Tim, welcome back to Fear and Greed.
Hey, Sean, lovely to be back again.
So broadly speaking, and before we look at the individual companies, how do you think the media industry as a whole has fared over the past year?
Well, look, clearly it wasn't the year anybody was expecting, because I think we thought it would be a year of deal making, but everything was put on hold because of the pandemic. And then it was very much a story of, depending how much exposure one had to advertising markets, just how bad it was for the media companies. Now, for some of them, there were little bright spots. Now, you certainly wouldn't say that about the outdoor sector, for instance, which obviously lost a lot of revenue because, people just weren't traveling as much. But I suppose if I had to point to one company and one CEO that made the best of the crisis, it would be Seven West Media and James Warburton, who was going to have to cut so much out of the company's cost base anyway, because it had a pretty big debt number. And the dawn of COVID was an opportunity to lean quite hard on things like the sporting codes, where they were paying a lot for the rights.
Yeah, Seven's an interesting one because it's actually quite a small company, given how influential it is in society. Obviously, because that's when you've got a free-to-air TV station, you have outsized influence. Where is that one up to?
Yeah, and obviously, as you'd know, there's more than one way of measuring a company. But if you measure it by market capitalisation, then it's worth about 700 million, which is surprising when you think Seven West Media. It's not just the TV network; it's also extensive sort of publishing interests in West Australia with the West Australian newspaper. Recently gave up its ownership of Pacific Magazines. But one of the reasons why the share price is reasonably subdued is because there is a chunky net debt still, about 240 million as of the end of the last financial year, and probably set to go up again a little bit. So there's a challenge there. And also the other challenge is lots of exposure to traditional media and not so much exposure to kind of growth media.
So they've missed out a bit on the streaming side of things, Seven.
Yeah, look, that was the place where things could have been so different. There was a conversation early on about Stan, which is now obviously 100% owned by Nine. It could have been a joint venture between Nine and Seven. And in the end, at the time, Tim Warner, the CEO, and I think more likely Kerry Stokes, the chairman, chose to do a partnership with Foxtel, and News Corp being the dominant shareholder there, for something called Presto, which failed very quickly, but meant that Seven was then left without a paid subscription play. So that's still a big gap for Seven as a TV company.
What I find interesting about Seven is that it's worth 700 million and its CEO, albeit on the back of getting options on share prices when it was very low, but still he's a very well-paid CEO given the size of the company.
Yeah, look, one of the things that gets disclosed in earnings season, as you'd know, is CEO remuneration. And of course, an awful lot is also based on share incentives, short-term incentives, long-term incentives. So although he's on a reasonably low for CEOs basic package, and this is from memory, but I think about just over $1 million a year, his full package in the year just gone was $7.6 million because of the way that his incentives have been set and the fact that the share price did recover quite significantly over the last 6 months or so. So as a result, the company's market capitalization is pretty much double where it was at the low point. So it is a company which is showing some signs of recovery. Not sure it's completely out of the woods yet, but one of the great things about capitalism is CEOs who deliver for shareholders are rewarded for it.
Yeah. Now, what's your take on Nine, Seven's main competitor?
Nine is an interesting one for me because the question for me still is Mike Sneesby took over as CEO just a few months ago from a very successful 5-year stint from Hugh Marks. And I'm not quite sure if I see yet where he's going to take the strategy. So Hugh Marks had taken Nine through the merger/takeover of Fairfax to create Australia's largest local-based media company. And the big challenge for Nine is where to get growth now. Now, the publishing side of the business, so the AFR, the Sydney Morning Herald, The Age, is probably going a little bit better than people expected. And thanks to the money that's coming through from Google and Facebook, that will look quite good in the financial year we're in now as well. The big question is Stan. It's a future play. It probably contributes maybe $1 billion to Nine's market capitalisation, which is about 4.8 billion at the moment. But it takes constant investment to just sometimes stand still, let alone go forward. So that means more money on sports rights, more money on local productions, more money on acquisitions. So if there's anything that the market questions at the moment, it's how does Stan contribute a bigger profit number than it does at the moment?
Stay with me, Tim. We'll be back in a minute. My guest this morning is Tim Burrowes, Editor-at-Large of Mumbrella and the owner of media and marketing industry newsletter Unmade. So if we move away from those two major players, and I note that you think of News Corp more as an international company, which I agree, notwithstanding its interest in other properties like REA. So let's just leave News Corp to one side, thinking about internationally. What about regional television?
Yeah, that's very interesting at the moment. Now, there are a few sort of what I'd almost describe as orphan media companies, the ones that they're not really the scale that it even makes sense for them to be on the ASX. And Prime Media Group is one of those. So that's the regional affiliate of Seven at the moment. And there's about 2 years left of that affiliation deal. And the big question there is, well, what happens to that company? Because there are 2 or 3 quite big shareholders who might have a say. And that includes Anthony Catalano, who owns Australian Community Media, the regional newspaper publishing group, but also Bruce Gordon owns quite a big stake as well. And Seven itself owns about a 15% stake. So it feels like in some way Prime Media will get sliced up. And the logic of that would be it would just be merged into Seven. And that was the deal that James Warburton from Seven and Kerry Stokes tried to do and were blocked by the other shareholders from doing. And where it really becomes interesting is when we get closer to the end of the affiliation deal, because at the same time you also have Southern Cross Austereo currently affiliated with 10, which rates less well than 7. That affiliation deal between Southern Cross Austereo and 10 also has 2 years left to run. And there could be all sorts of behind the scenes dancing going on about who might affiliate with who or who might buy who.
So does Southern Cross Austereo want a regional television network?
That is the big question at the moment. So Grant Blackley, the CEO, has sent a couple of signals that the company is much more interested in audio these days. So in the metro markets, it's got 2 networks. It's got the Hit Network and it's got the Triple M network, and then quite strong regional radio player as well. And is pushing really hard into audio through its listener app as much as anything else. So it sees a lot of its future about audio and audio streaming as well as traditional radio, and seems a lot less interested in the television side of the business. So I think if the company could get a good price for its TV stations, which are all on the regional side of things, it would probably move away from that.
So possibly you could end up with 10 buying Southern Cross Austereo's regional TV business. You could find Prime ending up back in 7. I mean, I know you think there will be consolidation as we go forward. Do you think that's kind of where we're going down that path, even if they're not the partners necessarily?
Yeah, I think that's the big question, is who the partners are. Because, for instance, when you look at the international side of things, 10 being owned by Viacom CBS, have they actually got the appetite to be doing more buying? And then, of course, one of the kind of other, I suppose, sort of weird dynamics when it comes to the metro TV networks and their affiliates is they quite like the relatively easy money that comes from the affiliate. So if they just get 50% of every dollar in advertising the affiliate rights, then that's quite nice, lazy money for them. So it needs to be a really great deal for them to actually buy the affiliates in the first place. So when Seven tried it with Prime, it was actually through a merger rather than parting with any cash.
Now, HT&D own Kiss and Gold. That's correct, isn't it?
Yes.
How are they performing? I mean, they've got some pretty high-rated radio stations.
Yeah, so HT&E here, there and everywhere, what used to be known as APN News and Media back in the day. So these days, very much an audio and radio company. So performing very strongly at the moment. You know, they've got market leading stations in Sydney and Melbourne and doing quite well in other markets as well. And for HT&E, it's such a big question of just how much of a player they can be in the coming consolidations, because they've had this ongoing dispute with the taxman for a few years now, which goes right back to the company's tax returns since 2009 and was to do with when the previous company sold its interest in New Zealand newspapers. So there's about $150 million at play, which maybe will end up just in the coffers of HT&E, in which case then the question is what to do with it, or could end up with the taxman, depending how things go. So you've got very much this just big question mark over how much of a player HT&E can be until the tax issues are resolved. And then just to make it really complicated, on the one hand, News Corp owns 15% of HT&E, and on the other, HT&E owns about 4% of the out-of-home company, O-Media.
Right. Well, we better go to O-Media. It's incredibly tied up. A lot of these media organisations really have close affiliations with each other. And what I always think is interesting, they chop and change too. Like, they're best friends for a while, but not for a long while.
Absolutely, yes. And you definitely see it with the families as well, you know, keeping track of how Kerry Stokes feels about the Murdochs, how the Murdochs back in the day felt about the Packers, and sometimes they would be bitter enemies. And at the moment, one gets the sense that Kerry Stokes, obviously the ultimate proprietor of Seven West Media, is actually quite close to News Corp, and we might see some conversations there. But yeah, O-Media, now run by Cathy O'Connor, relatively new as the CEO, previously ran Lachlan Murdoch's Nova Entertainment radio group. And O-Media, I guess, in recovery on the ASX. So turnover for the half year, and they only had half year results, of about $250,000 and delivered a profit of just a little over 100 million, which was the beginning of a recovery, because as an out-of-home company, it had it much worse than most. And I get the sense that we're just beginning to see Kath O'Connor's sort of strategy coming through, which is very much pure play out of home. So digitize the billboards, because then you can run more ads on them and make more money, and get out of the distractions. So at the moment on the block is Junkie Media, the youth publishing arm, which was owned by O-Media, but I don't think will be for very much longer. So that will be one of those deals.
And just finally, before you go, Tim, the online real estate companies, you think of those as media companies, Domain and REA being the two big ones?
Yeah, look, it's really difficult, isn't it? Because they certainly don't have the same model. So I probably, when I write about them for Unmade, I think about them a little bit less, but they underpin the share prices of both News Corp and of Nine. So, you know, both of those organisations own more than half of them, and they're huge organisations. So, you know, Domain, the one that's majority owned by Nine, turnover of nearly 300 million a year, market cap on its own of 3.2 billion. And then REA is, you wouldn't think of it, but it's actually one of the, well, arguably it's the biggest media company in Australia, with a market capitalisation of more than 20 billion.
Yeah, I always think REA is interesting. It's a top 25, top 30 stock, and you don't think much about it, but it is a lot bigger. You know, it's miles bigger than Qantas, for example, and some of those sort of more iconic companies that you talk about. REA has done incredibly well in the last few years.
Look, it really has. It's got international exposure. And, you know, overall, you know, when people think about Lachlan Murdoch, you know, Rupert Murdoch's son, and the sort of increasingly dominant within News Corp, he's made some bad decisions, some good decisions, but he led the investment in REA at a very early stage and got an excellent deal. So that one deal in itself probably puts in the shade all of the other mistakes he's made.
Fair enough, Tim. Thank you for talking to Fear and Greed.
Always a pleasure, Sean.
That was Tim Burrowes, owner of media and marketing industry newsletter Unmade. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.